Hi guys, in today's video I'm going to be talking about one of Vanguard's most popular funds, VUSA. Now VUSA, or you may have heard some YouTubers calling it VUSA, is Vanguard's low-cost ETF tracking the S&P 500 market index. Now very soon we'll be heading over onto Vanguard's website to take an in-depth look at VUSA. But first of all, I must just quickly explain what the S&P 500 market index even is. Quick disclaimer, this is not financial advice. If you need advice, please go and seek help from a professional advisor. So, the S&P 500, or simply the S&P, is a stock market index that measures the stock performance of 500 large companies listed on stock exchanges in the United States. The S&P 500 index is a capitalization weighted index, and the largest 10 companies in the index account for 27.5% of the market capitalization of the index. Now, I'm not sure quite how old that information is, but we'll take a good look later on at how much the top 10 companies actually make up right now. Also, just in case that explanation didn't make sense to some of you, basically all it means is larger companies make up a larger proportion of the overall index. So bigger companies, for example, such as Google, Microsoft and Apple, make up a much larger part of the index than a smaller company such as Gap. The amount that these companies make up of the index depends on their market capitalization. Now, index funds that track the S&P 500 index have been recommended by some very influential people. One of the main ones being the grandfather of investing, Warren Buffett. Now, Mr. Buffett has famously described what he would like his trustees to do with his money that would be passed on to his wife, and his request was put 10% of the cash in short-term government bonds and 90% in a very low-cost S&P 500 index, I suggest Vanguard's. Now, that's pretty powerful stuff coming from one of the most successful investors ever to have lived. Let's now head over onto the laptop and take a good look at VUSA. Okay, so at the time of recording, which is March 21, this is the current home screen that you will see when you reach Vanguard's website, which is vanguardinvestor.co.uk. To find the funds that they offer, you're just going to head over to what we offer, and we know that VUSA is an ETF, so we can go straight to ETFs. We're going to scroll down the page until we reach USA. At that point, you'll see the S&P 500 ucits ETF. If we click on that, and it will confirm that we're definitely on the right page, as it will say VUSA. So when I first started finding index funds, I remember how confusing these pages were on Vanguard's website and other people's websites too. I didn't know what information I needed to pay attention to and what information I didn't. So what we're going to do is we're going to take a real run through of all the information about this fund, and I hope it's going to be really useful for you. So the first thing you can see is all of these various tabs, and we're going to start off on the overview page, and you'll see 4 boxes at the top. The first box is the market price. This is how much it's going to cost us to buy one whole share of this fund. Currently on March the 9th, 21, it's going to be £53.24. Next up, you can see the number of stocks the fund is made up of. Currently it's 507 stocks. I know it's called the S&P 500, and I believe there's actually 505 in the S&P 500. The reason that I understand for the slight extra number is some companies, such as Google, are actually made up of multiple classes of shares. So you'll see Class A and Class B. I think there may even be a Class C of Google. But next up, you're going to see the ongoing charge, often called OCF. Now you can see that the ongoing charge of VUSA is currently 0.07%. Now this is really low. And then the final box is risk. You can see that Vanguard rates this fund as a risk of 5 out of 7. So it's a fairly high risk fund. The reason being is because our money will be 100% in equities, which is deemed quite risky in investing. Now, for any of you that have seen my Vanguard portfolio update videos before, you will know that I'm 100% in equities. If you haven't seen those videos, I'll put a link in the top corner. You can go and check them out once this video is over. So, scrolling down on the overview page, you can see the objective of the fund. It employs a passive management, also known as indexing approach. This is through the physical acquisition of securities, and it seeks to track the performance of the Standard & Poor's 500, also known as the S&P 500. Scrolling further down, you can see about the benchmark, but all of this we've actually spoken about before. It's basically just explaining to us that the index is market cap weighted. Then scrolling further down, you'll see a past performance graph. You'll see 2 bars per year. 1 bar is the NAV and 1 bar is the benchmark. Now the NAV is the fund itself. The benchmark is what it's trying to replicate or duplicate, which in this case is the S&P 500 index. Finally, scrolling a bit further down, you'll see another graph of past performance basing it on a lump investment of 10,000. Now, it doesn't matter if that's $10,000, 10,000 pounds, 10,000 yen, whatever. The figures would still be the same. So if you'd invested 10,000 in February 2016, your money would now be worth $21,371.94. Dollars, pounds, yen, whatever. Still very impressive. Let's now go on to the next tab and find out a bit more. So the next tab is price and performance. Scrolling down, you can see some of the recent prices of this fund. So you can see the current value is £53.24. Now its 1 day change is up 4p, which is a gain of 0.08%. Its 52-week high is currently £53.99 and its 52-week low is currently £37.11. Scrolling down the page, you can see another 3 graphs. I pay the most attention to the final one. You may decide on a different one, but let's head down the page to the final graph that I like. The reason I like this one is you can pick since inception, which is very important when it comes to investing. Investing in the stock market can be a wild ride if you're investing over short periods. You'll see big gains and you'll see big drops too. However, when thinking of funds like this, you should definitely have a long-term strategy of, I would say, at least 10 or more years. So if we click since inception, again it gives us another breakdown as if we were to have put in a lump sum investment of £10,000, dollar, whatever. You can see that was April 2012. That £10,000 or dollars would have grown right up to £33,649.20 or dollars, depending where you're watching this from. This is the real power of investing in low-cost index funds. On to the next tab, which is portfolio data. Now this is going to give us a bit more information of what the fund is made up of. So first of all, you can see again that VUSA is made up of 507 stocks, which we've spoken about before. I was right that the benchmark it tracks is made up of 505, so it's very similar. You can see all of the other fundamentals are exactly matching, which is a good sign because we're trying to track that index. Next up, if we scroll down the page, you will see regional exposure and market allocation. You'll see both of these say it's 100% in North America or United States, depending what one you look at. This is obvious as the S&P 500 is the 500 largest companies in the US. Scrolling further down, you can then see what sectors the fund is made up of, and you can see over 27%, almost 28% of it is in the IT sector. And then again, further down the page, you can then see what stocks make up this fund. Now we have already spoken about this earlier about it being market cap weighted, but hopefully this is going to make that even clearer. So you can see the largest holding in this fund is Apple, which makes up 6.73% of the overall fund. I'm just going to do a quick calculation and see what those 10 funds currently make up in percentage wise and see how close Wikipedia was. I'm not sure if you're going to be able to see it, but it's 28.06%. So on to the next tab, which is distributions. Now, index funds can pay dividends and VUSA certainly does. The current yield of its dividend is 1.31% per year, and this dividend is distributed quarterly. You can see information of previous dividends paid per share that you own of the fund. Now, I know it's not a lot of money. For the latest dividend back in December, it was just 21 cents per share. However, when you start holding quite a large sum of money, this dividend can soon add up. Now, what I do personally, when I receive my dividends from my index funds, I simply reinvest those dividends to buy more shares, which ultimately leads me to a larger dividend, which starts introducing compound growth, which is like a snowball effect going down the hill. And then on to the very final tab, which is costs and minimums. Again, we've spoken about the ongoing charge, or OCF, which is just 0.07%. You're then going to have minimum amounts that you can invest. On the Vanguard platform, you can do a one-off payment of £500, or you can set up a monthly direct debit of £100 per month. There are some small transaction costs that will apply, so I suggest you check out a page on Vanguard's website that discusses all of this in great detail. To find it, just scroll down to the bottom of the page and you can see our fees and charges. So the next video I'm going to suggest to you is a similar breakdown I did about one of my most favourite funds, VWRL. I'll put a link to that in the top corner of this one. I hope today's breakdown was very useful for you, and if you have any questions whatsoever, just put them in the comments box below and I'll do my best to answer them for you. If you found the video useful, can I just ask you hit that thumbs up button? I know it seems so tiny, but it really helps a small channel like mine grow. Apart from that, I hope to see you on another video very soon. Take care, guys.